What's going on, everyone? Welcome to the Nomad Hedge. So in today's video we're going to go through what happened this week. So we're going to make a week in review. We're going to talk about the yields, the dollar index, as well as go through some of the technicals in the major indices. So let's get into the video. But first, if you're new here, consider subscribing to this channel, hit that like button, and let's get into it. Right, so let's take a look at the 2-year to start with. And as we can see here on Friday, we broke below this fib retracement level 0.236, which coincided with this neckline here of this head and shoulders pattern. Now, the ultimate target here now would be around 0.5, 3.7%, but the most desired level would be with this golden ratio of 3.5%. So a 50% retracement here is obviously possible, considering that we're so much overextended here on the 200-day moving average. We also saw a clear breakdown here on the MACD, which is a good sign. And we're not anything near oversold levels yet. We're still neutral here on the RSI, so things could continue to move towards the downside. And if we look at this thing on a monthly chart, we got clear resistance here at the golden ratio of 1.618. And so we've been down for 2 weeks now, and the MACD is clearly showing exhaustion here towards the upside. But take a look at the RSI. I mean, we're extremely overbought here. So whenever we see levels this extremely overbought, the downside could be to the extreme as well. So that's just something to think about. Overall, what this means for the 2 years, that the 10 years is probably going to follow, most likely. And a breakdown of this neckline here is going to maintain the bias towards the downside. And obviously, that's going to be bullish for equities. Okay, so let's take a look at the 10-year Treasury yield, beginning with the daily chart. And as we can see here, we broke below this higher low trend line here. And this has acted as support a couple times here. So for the third time, we're now below it. I mentioned in the previous video this falling wedge here, and that would possibly give us another leg up, considering that the Fed is going to continue its rate hiking cycle and that the Treasury needs to compete. But we did find some resistance here at the 21-day exponential. So just like the 2-year, if the 2-year is going to retrace around 0.5 on the Fibonacci scale, we could possibly see the 10-year following suit here. And that would also coincide with this 200-day moving average. But the reason why I think we could possibly see another leg up here, we just found support here at the previous high here back in June. And the fact that we're so oversold here on the RSI, and the fact that we do have a positive divergence here on the MACD. So I'm just saying, like, maybe we could see another leg up here. I want to see a complete breakdown below this support line from June this year to give me conviction that the yields are going to continue its downward trend. But because we're oversold, nothing's going to go in a straight downward line here. So we're going to have some updates here on the yields, just like the dollar index or anything else in the equity markets. And everything was pretty much choppy here as well. So that's just something to think about. I want to show you this thing on a weekly chart as well. But the weekly is telling us another story. I mean, if you look at the RSI here, we do still have some rooms towards the downside. And the fact that we do have a sell signal here on the MACD, along with a breakdown here of this higher low trend line, would suggest we could possibly continue to see this thing continue its downward trend. Now, we've been down here for 4 weeks now. That is why I also sort of like maybe there's a possibility for another leg up here, testing this support, making its way up here. But I'm just speculating here. I like to look at things, not just what the technicals are saying, but also what could also happen in the opposite direction, right? So if we also move on here to a monthly chart. Now, what's interesting about the monthly, obviously we do have, overbought levels here on the RSI. I mentioned previously that the 2-year would retrace to around 0.5 if that head and shoulders pattern would play out. But if we look at this lower high trend line here, this is a trend line that goes back to 1981. And so we made history here when we broke above it. And so possibly if the 10-year doesn't find itself finding support at 0.5, it could possibly move down to 0.618, and that would correspond to this lower high trend line here. So it is possible that the 10-year could move even further, and that we do have a confirmation here on the MACD and exhaustion here towards the upside. And so yeah, that's how things are looking at the 10-year. Obviously, when we look at the yields, that's giving us more supportive actions in the equity markets as yields are continuing to fall. Now, because of the fact that the 10-year and the 2-year have been continuing its downward trend along with the US dollar, what's a little bit concerning is that the VIX has fallen pretty sharply as well. And if we look at the VIX here on a daily chart, we can see that we closed below this open gap that we left open back in August this year. Now, the concern would be that we could possibly see another leg up here on the VIX. We could see a lot of more people hedging their positions, and that would obviously not be so much support of US equities. And so I like to look at the MACD here, because the MACD on the internals, obviously we've had a massive drawdown here, but we're seeing some upside momentum here despite this downward trend. And now that we've been closing this last open gap, there is a possibility that we could see the VIX spiking here at these levels. And so if you look at the VIX here on a weekly chart, we can see that we just found support here at the previous low here going back in August as well. So if we're breaking below this previous support, we can look at this thing and treat this thing maybe as a bear flag. And so the next target would be around here, which would correspond to around a VIX of 17. So once we reach 17, that's just going to be a critical level to watch for the VIX, because any spike towards the upside would be very highly likely at that point. Now, that could obviously be coinciding with you know, the next CPI report. I'm just speculating, or maybe the next FOMC meeting on December 13 or 14 this month. So this is a monthly chart showing us a little bit of a clear picture here. So this is a trend line here going back to November 2017, and it's been holding this trend line pretty clear here. So now that we do have a break below this this bear flag, any support here would obviously mean a spike at this point. So that's just something to think about, despite the fact that we're seeing the dollar falling and the 10-year along with the 2-year falling as well. So that's just something to think about. Let's also glance over at the dollar index, and as we can see here on Thursday, we shot below this 200-day moving average, and that was obviously positive news. And so now that we have a complete breakdown here below all key moving averages here, the question might be remaining if this could possibly be a falling wedge here in the making. I'm just speculating, but it could be a possibility here because we've been so much oversold here on the RSI. We're looking at the MACD as well, so overextended towards the downside. We could possibly see a falling wedge here. So we're looking at a target here for around 0.618. And as this thing continues its downward trend, obviously that's going to support equities towards the upside, as we're seeing more US-based companies overseas seeing the foreign exchange rate, thereby increasing their profits whenever they convert back to US dollars. So that's how the market is looking at this thing. And if you look at the dollar index here on a weekly chart, and this thing has been down now for 1, 2, 3, 4 weeks in a row. So that's pretty impressive. So now that we've been, you know, retracing here 0.5 on the Fibonacci scale, the next target is going to be the 0.618. And we can see here that the RSI still has some room towards the downside. We're not seeing any exhaustion here towards the downside, confirming the fact that we do have some downward potential still on the dollar index. So giving you even a bigger perspective here, this is a monthly chart. And I've been pointing this out a couple times in my previous videos, but this higher low trend line here was very clean at this point. Now, we didn't actually tag this thing. It was almost obvious here that this one would break down because we were so overbought here on the RSI, and that we did have an exhaustion here towards the upside on the MACD. So the bias is still towards the downside. Now, I drew a Fibonacci scale towards when the trend, this higher low trend line started, and so it's been pretty clean so far. The next line of support would be this previous high here going back to 2016. So we're looking at a dollar index, we're looking at 103.8, right? So on Friday, we closed at 104.5. And so if we're breaking below this support level here, this previous high, we could look towards maybe this 0.5. And if this bear flag actually plays out, we could see the dollar index eventually falling to around 88.77. So It is a possibility, but I'm just saying it's been playing out pretty nicely here for a long period of time, and this was the last, possibly the last leg up here of this bear flag. But we've only been testing this one 2 times, so there is also a possibility that we could see this thing testing another time, another leg up, and then obviously at chop. So, but this is where we are right now. Overbought here on the RSI. The bias is continued towards the downside for the dollar index. This is going to support equities for sure. And so let's move on here and take a look at the major indices. And for the week, the weekly market performance for the Dow was 0.24% for the Dow for the week, and the S&P 500 saw a gain of 1.13%. The Nasdaq Composite was up 2.09%, and the Russell 2000 was up 1.27%. So this was a good week for the major indices. We continue to see some strength beneath the surface, with an increase in advanced decline lines for the Nasdaq as well as the NYSE. Okay, so let's begin by taking a look at the S&P 500, or ticker symbol SPY. Let's begin by taking a look at this thing on a 15-minute intraday chart here. We can see that we gapped down here after the release of the non-farm payrolls that saw an increase of 263,000 jobs. Obviously, good news for the economy. Was not so good news for the stock market, but you know, the forecasters called for a 200,000 increase. Prior month was 284,000. So, but then everything reversed here. We closed a little bit lower here during the end of the session. But if you look at this pattern here, we do have a lower high trend line here. So next week's going to be important that we're breaking above this thing. And, you know, one could look at this as a potential inverse head and shoulders pattern. But if you look a little bit more closely here on a daily chart, now we shot below the 200-day moving average, managed to close above it. So we do have some overhead resistance here. We aren't near the high of the trading session on Thursday. But a lot of people like to look at the 200-day moving average as something, you know, to celebrate. But I mean, if you look back in history here, I mean, we were above the 200-day moving average here. And look what happened. We tested this lower high trend line here, and that's when everything started to break down. All right, and then we fell just below that 200-day moving average, and then all of a sudden the 50-day moving average became important. So what I'm actually looking towards now is critically going to be this previous high here. Okay, so this thing goes back to September. So we need a clear break above this high here, and then we can look towards maybe getting above this lower high trend line here, and that in itself would mean a complete extension here of 0.5 on the Fibonacci scale. We would then look toward closing this open gap as well. Internally, if you look at things more on a technical level here, we can see a possible rising wedge being played out here. We can't ignore the fact that we still have an open gap here coinciding with this 50-day or rising 50-day moving average. Any break below here would be good if we're closing this open gap and then possibly move higher. But if we look at technical indicators here, yes, the MACD saved us from a sell signal here, but we can't ignore the fact that we do have momentum here going, you know, slightly lower from its high here. We would call this a negative divergence. And we're also seeing that money flow indicators also starting to subside here. We have seen now that buyers have exhausted here towards the upside on the ADX. And we're also closing in towards overbought levels here on the RSI. Now, volume also disappointed on Friday, to be honest with you. I really wanted to see volume here above average, but it was just slightly higher than Thursday's levels. That's just something to think about. Maybe this pattern plays out. If we're getting a break below this this high-low trend line here, I want to see this thing filling this open gap, and then from there, hopefully support at the 50-day moving average, and then move higher from there. Let's also take a look at the S&P here on a weekly chart. Now we can see here, this lower high trend line has been pretty clean. I mean, every time we tested it, it's been falling down pretty quickly. So, but on the technical sides, we still have room towards the upside on the RSI. We're seeing money flow indicators pointing upward here. No signs of exhaustion towards the upside. The buyers are stepping up here on the weekly. Longer term, things are looking good for the S&P. Short term, when we're looking at the daily, we could possibly talk about a pullback here or some profit taking going into next week. So let's move on here to the Nasdaq 100, or ticker symbol QQQ. Now we can see that the Nasdaq been holding up pretty good here for now, but it seems to have found some short-term resistance here below that fib extension of 0.5. Now volume saw some improvement here 3 days in a row, so we can see that the Nasdaq is being catching up here to the other indices. Now on the negative side, we still have this open gap here going back to November. Now if you look at some other indicators here, we can see that these short-term indicators, stochastics and the percentage R, are showing overbought levels. So heading into next week, we could potentially see some profit taking for the Nasdaq. We failed to retake this previous high here. Now if you take a look at this previous high here from November 15th, unfortunately we did not break above it. Now we almost tagged it here on Thursday, we did not break above it, and then on Friday we went below that 5-day moving average, and then we closed above it, luckily. But I'm just saying that we need to break above some key levels here, and for now this November 15th high is going to be critical, so that's just something to think about for the week ahead. But if we would find some resistance here and completely break below this rising wedge here, we could potentially see a target around 275 or 270, and that would also be below this 50-day moving average. Now it would be good to fill this open gap, and maybe we could see some demand from here before moving its leg up higher. But all I'm saying is, if we're going to close this open gap, we're going to break below this 50-day moving average. Moving on to the Dow Jones Industrial Average here, and as we can see here, we can see some signs of potential exhaustion here towards the upside. Thursday was a very bad day here for the Dow. Now then on Friday we went up pretty quickly, but again, just like the S&P 500, the volume disappointed, and so we're now also potentially building up this rising wedge here. Too many choppy up and down days is typically a sign of distribution, so that's just something to think about. And on top of that, I mean, if we open up this MACD, we can see a clear sell signal here and that internally we can see that momentum is starting towards the downside, and even below the center line level as well. So moving into next week, we'll see if this thing's gonna play out, breaking down this rising wedge, potentially finding some support here below some important key moving averages here. We do have an open gap here as well. And I mean, we're still above this 50-day moving average. I mean, pretty much overextended. It's been rising for quite some time now, but it's overextended. So we need a little bit of a pullback here, testing some moving averages, see if we can find some important support here, and then hopefully begin its leg up higher for the Dow. So if you look at the RSI as well, I mean, we've been pretty much overbought here 2 times in a row. So now we're below that overbought level, so that could also signal that the RSI is probably heading down now, along with possible breakdown of this rising wedge. Now if you look at the Dow here on a weekly chart, we can see we've been up here for 4 weeks in a row, so that's pretty impressive. And volume has catched up here. We're seeing that the money flow indicator is starting to reach overbought levels here on a weekly chart. But again, I'm looking at this MACD here. Any signs of an exhaustion here towards the upside on the weekly would entail that we could see some pullback on the daily chart. So the ADX has also flashed a buy signal here above that 25 level, and overall it's looking healthy here on a weekly, so we just need to make sure maybe see some pullback on the daily chart, finding some critical support at some of these moving averages, closing some open gaps, and then move up higher from there. So if you look towards week ahead, overall it's going to be a quiet week, but we're going to get 2 economic data reports on Thursday and Friday. So on Thursday we're getting the weekly initial and continuing unemployment claims, and on Friday we're going to get the PPI, or the Producer Price Index, for November, as well as the University of Michigan Consumer Sentiment for December. So that was it for today's video. Just a quick briefly review of the markets and how the technicals fare out on the major indices, as well as the dollar index and the treasury yields as well. So I hope you enjoyed the content, and don't forget to subscribe and like the video, and I'll see you guys in the next one. Take care for now and have a great weekend.